Thank you, everyone, for being here. It wasn't that long ago that Microsoft unveiled ChatGPT, changing the way your kids do their homework, some of your colleagues do their work, and I guess most importantly for this audience, the way we invest and we trade markets. So we're here really to talk about how some of the smartest brains in the market are grappling to try to figure out how to best use the technology, where trust is, and can we trust it, and how can we actually make it something that's usable? So tell me a little bit about how you're using it at your company.
Good afternoon, everybody. Nice to see everyone. I'm Lule Demmissie. I am the U.S. CEO of a fintech company called eToro, which is a trading platform for individual investors who come to our platform really to do trading on all sorts of instruments, from crypto to options to stocks, but also partake in a social ecosystem. It's a social trading platform. So we were at the genesis of the company, started as a force multiplier using the network effect, right? Because social is a network effect. So as AI started to take hold, it made sense that we were going to be one of the early adopters trying to experiment on how we would do this, right? We have a lot of data. We have about 32 million users on our platform globally, 100 countries that we do business in. And so we have a complexity of interesting behavior on investing that we leverage in a few ways. So one is how you search on our platform now. And we don't necessarily make these live in every country because of the regulatory sort of reality of different countries. So our search engine is optimized using AI. About 65 to 70% of every single question that comes from customers is actually served by our AI. We have portfolios that have been devised using either AI stocks or leveraging AI technology to be able to construct them. We also have what we call popular investors, which are people who get followed, because we have an instrument called Copy, where you can copy other people's strategies. So you can optimize how you copy, who you copy, how you mix, using some of the AI engine sort of powered stuff that we do. So it's been really interesting experimenting, and no doubt about it, we're going to continue to experiment because, as I said, the genesis of the company is really suited for this.
Kate.
Great. Hi, everybody. Kate Hillow. I'm President and CIO at Russell Investments. And we've been using various forms of machine learning in our quant business and our research and development for many years. But probably about a year and a half ago, we started to broaden it out in terms of the rest of the investment team. And a big part of what we do, for those that don't know Russell, is that we select and hire managers from around the world, public and private, across all the different asset classes. And so we have lots of data that we've collected over the decades. But as we kind of looked and thought about how we were using it and how we actually had our process actually absorbing that data, it wasn't as dynamic, as it could be. And so a big piece of what we've been doing is, taking, a lot of that historical data that we've collected, but there's also just so much more enriched data that you can get on managers and different strategies now that we're starting to be able to pull into the various tools that we're creating. And the big theme that we have is really around looking for patterns and trends that, not only are the ones that we acknowledge and we have determined, for lack of a better word, were the things that drive the good versus bad managers or the best managers, but actually started to look through and see, are there patterns or trends that we're not seeing because of the way that we've kind of structured our process over the years that actually helps us think through, are there certain managers that in certain macro environments or for certain types of outcomes that we're trying to achieve for our clients are better suited to kind of compare and combine together. So that's probably one of the most practical versions of what we've done. The other thing I would say is the private markets, for those that kind of live in that world and know how challenging it is to get data. In the public markets, there's so much information you can get, and so it's almost like overload, and it's just like trying to figure out how to best analyze it. On the private side, it's so manual getting that information in, and so a lot of what we've done is more on the Gen AI side, finding different techniques to pull in that information, whether it's through research reports, discussions we're having with managers, press releases, anything that you can kind of pull in terms of that unstructured data and get it into a place where you actually can, because you can never do with human power, get enough information, again, to look at trends that you're seeing across different types of managers, the companies that they're invested in. And so those are probably the two most recent things that we've been doing that are really core to kind of how we invest.
Artemiza?
Yeah, so hi, I'm Almeida Woodgate. I am the CIO of Integrated Quantitative Investments. We are a quant shop, as the name says. We have been using AI. AI is actually, it's part of our DNA since we're quants. From day zero, we're heavy users, and it's throughout the entire process, whether it's from the data collection, data analysis, model identification, model signal selection, signal weighting, all the way through to trading, risk optimization, and so forth. So to us, if I think about AI, I love the way you asked the question. It's around, well, ChatGPT came on board, a year and a half ago. Well, ChatGPT is like one of the small, changes in the marketplace and the evolution of what is a broad spectrum of AI. So machine learning has been around for a very long time. Big data and processing big data has been around for a very, very long time. So we're sort of, now adding one additional tool to our toolbox, aside from the machine learning models that are continuously improving. And within the Gen AI, I love what you said, Kate, around using that to basically come to better insights. I like to think of it as doubling my team. I tell everybody, now you have a personal assistant, okay? So you are who you are, and you're so much more efficient because now there's you squared. So that's where we're very heavy users of both machine learning and Gen AI throughout the entire process.
And I think trust has been an issue that a lot of people have been discussing. Can we trust it? Do we really need a human to verify it? And I think when we were preparing for this panel, I had a little conversation with you guys, and I said on my first job, I had to do the calculation of cocoa stockpiles on the exchange. And one of the things I had to do was basically, my boss used to go and look at the numbers and multiply and add everything in her calculator. And I was like, why don't we create like a spreadsheet for this ages ago? And she was like, can we trust this? And it took her a while to actually trust the spreadsheet. I wonder if we are in the same sort of space now with AI. Can we trust it? Do we need a human to verify? And I'm actually going to bring a question from the audience too. There is a QR code flashing sometimes that you can use. And I think the audience was asking, how do you see the prop models versus the open source? So I'm just going to open up to you guys, whoever wants to start.
Maybe I'll start just in terms of the proprietary models. I mean, because from a data perspective, just go into open source. It's helpful in terms of kind of getting the information in, and then it also gets shared out. And so I know at least as we're thinking about it as a firm, it's trying to get that balance, right? It's about the trusting the data that we're using for sure, but it's more about the sharing of your IP out into the world that worries me more about kind of going open source. And so if you can mask it in some way because it's getting kind of aggregated with other information, maybe it's workable. But I do think that at least as I think about, ultimately we're running other people's money. And so the trust piece and making sure that we're rigorous in terms of the tools that we're building, that's always part of anything we do, but that's very natural. AI or Gen AI is just a different version of that. But I do think it's important to make sure that it is it's a newer technology. It's a newer way of thinking. It's a newer way of kind of approaching an investment problem. And so I do think having the humans, but the right humans that kind of have the skill set to actually think about how to use the tool, think about how to question the data, think about looking at the output and saying, okay, does this make sense or not? It's similar example I was thinking about when I first was working in finance and we were doing risk budgets, like your risk budgets, and you had to build your own covariance matrix, and and it was like a pain to do, but you did it, and you actually felt like you had a lot of control over it, and you did little things in the back end that you probably shouldn't have done, but because it made the answer look better. And then when we shifted to machines to do it in our prop systems, I was always so worried that the analysts didn't understand how the math worked, but they figured it out over time. And so I do think there's this transition that we're going to need to go through where it's a new tool, it's a new technology. You need the people that really understand how to actually apply it, helping us develop it and integrate it into the organization and the ecosystem. But ultimately, I think it's going to be like any other tool where we're going to be able to build it and you're going to be able to trust it.
Artemiza?
Yeah, I'd like to add to that, and maybe accentuate what Kate just talked about, having the skills to utilize the tool. Now, we used to hammer a nail. We used to put a nail in with a hammer. Now we all have the nail gun. Okay, so would someone who doesn't know how to build a house be able to build a house with a nail gun? That just because they have access to one? Well, no, you still need to know how to build a house. So using these tools, it's very important to understand what goes in and what comes out. How do you interpret it? I know nothing about the medical field. Okay, so if I ask ChatGPT questions about, am I sick and my knee's hurting? Well, do I have a doctor? Do I still need to go to a doctor or not? Do I just trust it? Maybe it gives me the right answer. Maybe it's not even a question of trusting the answer that comes out. It's just the ability to understand it and analyze it and interpret it and do something with it. And that's why I say, like you take our people on our team and let's say you square them or you multiply them, but you still have that person and their know-how and their ability to ask the questions, interact with the tools that then you can leverage. You can't, create a doctor from, a quant necessarily, without them going through proper training. That's at least my perspective. Yeah.
Fair enough. Lulu, you want to weigh in?
Yeah, I think that honestly, trust, although I'm going to say something really incendiary, I think it's the wrong word for the era we're living in. I think that what we need to figure out is, so there's a huge chasm between, I would say, 34 and under, 38-ish and under, and older when it comes to AI. So we do quarterly surveys of our customers, but as I said, we have 32 million users, so we also see what they do, right? And consistently, they rank technology and community higher than they do institutions and whatever else we do to increase trust for them. There's a chasm in which a generation has decided, I don't need you to be the go-between, just give me the tools to assess it. And because of that mental framework, what happens is they're better practiced at using these tools. And I actually think the way we're going to figure out what our new version of trust is back to what was just said, which is like you become a practiced user. And when you become a practiced user, you know where the dark corners are. You know how to ascertain certain things better. So I do think that to some extent, it's almost like this is a moment where we should be taught by the young. I think they have a different perspective. 98% of my staff is people who are 34 and under. So I've already been inducted into that space, whether I like it or not. And I do think that there is a mental framework that they bring forth that is incredibly useful in helping us understand how to approach the age of AI.
And that sort of brings me to my next question. I think, how will the uses of AI be different if you are an institutional investor or a retail investor? And I think, Lulu, you have like a great perspective on that.
Yeah, I think part of it is structural, right? So, Warren Buffett just came out, I think, yesterday or the day before, and he was talking about, I don't know what to do with all this cash, excess cash as an asset manager, as I have this mandate. I can't easily find, he didn't quite say it that way, but that's what he was saying. I can't easily find places that I could deploy capital in, right? Individual investors don't have a mandate of an institutional burden. They can look at a trend and see that mega caps are winning. They don't have something holding them back to be like, and so for them, ultimately, they look at the data and they look at, because platforms like eToro have empowered people to have access to these markets now, right? Ultimately, they can go and express those ideas on their own. So what you see on our platform is individuals taking advantage of what's happening now to take profit off the table. About 40% of them are selling in this environment. Then they go off and go deeper in the top names, right? The top mega names when they get a little cheaper. They partake in crypto. They don't have an institutional mandate holding them back. It is literally what they learn from the community, right? Because again, there's community within the ecosystem of eToro and community outside, their own research. 82% of them say they would be happy to rely on AI-empowered asset management tools or research. They already use them. 57% of them say they use them already. So they've already leapt into the future. I'm not saying that the future is all candy and sweetness, right? But I am saying that I think all innovation requires a certain level of leap in order to understand it in its ecosystem. And then we figure out what's the new normal of creating, managing the moral hazards and the rules of engagement around it.
How does it work for you, Kate?
Yeah, I think you said like the, I don't know, is it the institutional anchor or whatever it is. I mean, at the end of the day, if you're managing somebody else's money, there probably is a different bar that you feel like you need to clear in order to put $1 of capital to work. And so I do think that runs the risk of not taking as much risk, right? And not kind of being as innovative or exploratory in how some of these tools can be used. That said, if you look back, most investment processes are about kind of creating frameworks and models to kind of take in data and try to think about it in the environment they're operating in. And this is just an evolution of a way to do that. And so while I think institutional investors are going to be more cautious to just shift over or turn on an AI model to make investment decisions on how to run somebody's pension assets or somebody's endowment assets, I do think that there is an excitement from, I wouldn't just say the 30 and under. It's very interesting. I actually think it's the senior people, at least as I've experienced in just talking in the industry, senior people and the junior people that are really trying to understand how to apply this. And I do think that there's a great partnership, at least that I think in my organization, where we're creating sandboxes that are, let's just call it safe for people to try out new things, bring out new ideas, and it's giving them the chance to innovate and think about data in a different way than maybe the senior team members might think about it, but do it in a way that allows you to actually have some rigorous discussion around it and testing around it before you actually use it to actually invest somebody else's money.
Yeah. Artemiza, I think I would love to weigh on that, but also in one of the audience's questions, how do you separate hype from reality?
Right. Well, that's a difficult question to answer, hype versus reality. And, for us, machine learning has been part of who we are, but AI is much broader than that. It's about facial recognition, it's about robotics, it's about so much more. And, generative AI is one tool there. Next, machine learning and things are related and so on and so forth. So I think there's definitely a reality that has been around for a very long time. I don't see it as just hype. And it's amazing how the new tools have been embraced by a much broader group, which hopefully will lead to acceptance, which hopefully will lead to maybe even institutional investors, which are still humans, and have to make a decision whether or not to trust a quant manager. If you show them a machine learning model, then they say, oh yeah, we get it. ChatGPT told us all what it's about, But at the end of the day, yeah, I think there's probably quite a bit of reality, I think, in this. There is hype and excitement around any new technology. But it'll take a while between when that hype will be reflected in seeing a robot walking down the street and shaking your hand and, greeting you, or doing the next thing that people want to see that's visible in their faces.
But the other thing that you also talked about was productivity, right? How now everyone has an assistant, and we know that, the U.S. and lots of places in the world are really facing a productivity crisis. Talk about how you use AI to increase your productivity.
Right. Well, we have, free mandate, I guess, on my team, figure it out, do as you wish. But, the results, obviously, there is a certain research process that has to be adhered to. And I love there's also another question from the audience I see about best practices for refining the AI model versus prior manually driven analysis. There are best practices that need to be in place, whether it's investing other people's money, best practices for research so you don't just data mine and believe spurious correlations, best practices for how to utilize these tools so you don't just randomly start nailing everything to the wall. So all of these need to be adhered to, but beyond that, everybody's free to go ahead and do their research and learn. And it's there in that learning part that is really where the AI steps in. The prior tools we had, let's say AI is about, and machine learning is about a model that learns on its own from the data. The prior manual-driven analysis, as the audience member asks, is about where the human says, I believe this is the structure. You go and you start cut your cookie left, up and down and up and down. So there's a human element versus a machine learning. The machine learns the model and machine has that feedback loop. So it's useful to understand the machine learning and bring that in, but you need the human to validate that. You need the human to go ahead and interact with it and bring the results and follow the process so you don't, chase unicorns.
Any thoughts on that?
So for us, productivity is, I think that's very true, that productivity comes in a few categories. So one is where it improves scalable productivity. So as I said, 65% of our servicing of our customers now actually is taken care of through the bot, right? Where somebody will either prompt or monitor the bot, but that is happening. Our marketing team, over 60+% of work we do out of our marketing work is augmented by some sort of an AI machine tool somebody uses. So those are sort of like the scale work productivity. Then there's the individual work productivity, right? So what took us, 7 different people and several stops and cookie maker processes, now one person can produce an ad in 2 seconds, and that's that, right? So we've shrunk time when it comes to individuals that are producing without having as many handoffs. In fact, we have our options analyst out there today, right? So he publishes in the morning, he does his shows in the afternoon. He is essentially a self-contained pod with machinery around him and people, yes, around him as well. So I think there's individualized productivity that has come out of this, but there's also scalable productivity that has come out of it. And I think we are just scratching the surface on both.
Kate.
Yeah, I think the only thing I might, add, I think is a little bit of what we were saying, that the prior technology was that like process automation and taking something that you kind of had created and doing it more efficiently, and RPA and all that type of stuff. I think about a year ago when we got basically a group of leaders together to start thinking about AI, Gen AI projects. So we did reach out to everybody at the firm and say, give us some ideas on things that could have a lot of impact that you think would be relevant to applying this type of technology. And 70% of what came back was more RPA, more process automation type of stuff. And so I do think, to make the point on AI, what needs to be different is you need to think about transforming the process when you think about how to use some of this data. And that's where you actually get, I think, a scale and an impact in terms of productivity that's very different than at least the investing industry, I think, has seen. We've done a lot of process automation over the decades, and certain quant teams have improved their investment strategy, but really to change our business model, you need to think about this as transformative. And so you need to start out maybe early stages doing the stuff that we know how to do. And so like we do manager meetings, we get in data, let's take that in and have a machine try to help us do it better. But what I'm really excited about in terms of productivity is when we actually get enough people within the organization that understand now how to apply these type of technologies to actually do something different and something better. And that's the piece where I think the real productivity and margin differences and the real change in our industry is going to happen. And
do you think, as one of the audience members is asking, have you been able to measure, data validation? Like how has that happened for you?
Oh, well, I'm going to give you a couple of quick examples. Right? So I have some fun ones. So I had a fixed income portfolio manager left our R&D team, the one that already was doing machine learning. Within 6 months, she had automated herself out of 80% of her job. I was so excited. I can't tell you, I moved her into a much different role, and a different, more senior role, and one that was much more creative and innovative, trying to think through different ways to apply this to the investment process. But there is that another great example. We had a portfolio manager in London, multi-asset, complicated stuff, having to pull stuff from so many different places, because the asset classes, different systems. We had an intern come in, and within 2 cycles of quarterly reporting, took something that took 9 days down to basically 3 hours. I mean, the portfolio manager was, shocked and amazed at the same time, and just had to do a quick review. You still needed the review, but the amount of things that we can actually start to do once you unleash people and give them kind of the open forum to do it, I think is going to be really.
And with every new technology, AI is obviously attracting the attention of regulators. Is there anything that you're concerned about as regulators start looking closely into AI, and especially for this audience, the use of AI in markets and investing?
My biggest worry is back to the sort of the mental framework part of it. So I think there are 2 fundamental things that I think regulation, by definition, is in the DNA of, right? So one is, whether it's policymakers or regulators, it's this protectionist attitude, right? So we must protect first. And sometimes when you do that, what you end up doing is make the cost of entry much more expensive for innovators to come in, because now they have to have a compliance department that's larger than their dev department, right? And that I don't think is the right answer. I do think that it is guardrail oriented that we need to have rules around, and not specific rules that seem prohibitive. I'll give you an example. I love the White House guidelines for AI that they published about a few months ago, at least 6 months ago, I think. The SEC one, I think, is a little bit more problematical, because it is very prescriptive in its an attempt to try to create the world. We don't know what this Brave New World is going to be like. So in some ways, the regulation has to be guardrail oriented to allow for experimentation, and then we course correct as we go along, whether it's with rules or the coding that we do, right? And so that's my worry, is that both policymakers and regulators may not have the mental framework to ensure that we end up actually making innovation slower in America, which would be a big problem from a sort of advancing innovation in America.
Artemiza?
Yeah, I actually think that at least on the institutional side, having been users of machine learning and big data for a long time, the regulators actually have have been actually pretty on top and have learned how to deal with, protecting individuals' personal information and making sure that you don't web scrape and what you web scrape and how, all those rules are set up to protect the individuals and the customers and so forth, and, understanding the risks associated with investing or utilizing certain techniques. I hope that they will apply the same mindset to understand what is there to protect without inhibiting, as you said, while allowing people to innovate, because otherwise it would be a real shame. And given how widely adopted this is, the new technology and how excited people are about it, I think there's a lot that can come out of it. But we do need to protect the individuals. And I shouldn't be able to find a data set or somehow scrape it and put it together that tells me exactly where you were yesterday at 2 o'clock and what you bought, right? So there is, I think we need that fine line and we need the protection in there within the right dose.
And I mean, that's the last question from the audience too, Kate. Maybe you can help us with that one. What risks do you see associated with AI, considering that it learns much faster than humans and that pace is just likely to keep accelerating?
Yeah, I mean, this is where I'll say two things. One, I've always in my career surrounded myself with people that understand the technology and all the stuff better than I do. And I think that that's going to be yet more important. We need to make sure we have the right people in the room to really understand these risks and how to control it. That said, I do think that this is something that is very solvable. And so, whether it is through some version of regulation, but I would think that it's a moment from an industry perspective or for us to really own, thinking through how we kind of use this information, how you use this data. There's going to be bad actors. Unfortunately, that's the world that we live in. And you need to kind of put the structures and the ways to detect that. Cyber risks that are associated with AI starts to get very concerning. You get data sets that are put out there that tell you a certain answer that make you invest in a certain way that lose you a whole lot of money. And there's been people there that are going to do that because they're going to be on the other side of the trade. So there definitely needs to be, with it, strong regulation, but also I think strong industry-wide participation and really thinking through how do you control this data and this information and how it's being used when it's actually getting put into the market. When you have it in the research arena, I feel a bit more comfortable that you can control it before it actually gets into the trading world and where it can actually do some real economic damage for individuals or corporations. But I do think that this is a moment where we need to take some ownership over this and try to figure out how to control it and police it. The one thing we haven't talked about, though, that I feel like we should mention is the cost of doing AI is quite prohibitive. One of the reasons we reached out to the firm to ask for ideas is we needed to prioritize what were the 3 to 5 projects that we were going to work on in 2023 that we thought would have a lot of impact, because when you start taking this type of data and the computing power that's required for it, it gets extraordinarily expensive. So I didn't want to end the discussion without us just mentioning that's going to be limiting as much more than the regulations are. I think. Yeah.
Talk a little bit about the risks and the costs, Lule.
So I would just double down on what she said, but I also think that what's probably going to happen is the megas will spend the money on the computational and the rest of us will consume the data and augment it. So I do think there will be sort of like a barnacle rock sort of relationship eventually where smaller innovators will start benefiting from the mass amount of data sort of work that the larger institutions have done. But if you're trying to be part of the circle of folks that are being, that are actually doing the computational power, it is incredibly expensive.
Artemiza?
Well, we're cloud-based, and I believe that there's a tremendous amount of work that has been done on the computational side to facilitate smaller players to become the barnacles. But there's a tremendous amount of data as well, that requires processing. So it is a bit of a, there's truth to both sides. It is more expensive. It's actually, quite expensive also in terms of human training to know how to employ the models and utilize them. But on the other hand, you also have access to a lot more candy, a lot more sugar to fuel the machine, so you're running high all the time, sugar high. So it's I think it's going to be, stepwise. You have a change in the human element and then change in the computational power and augmenting each other. We see tremendous evolution right now.
And how long is it going to take for us to really be where you guys think we should be in the market?
I still want my nanny, my robo nanny. That's a problem to be solved for any working mom. So I don't know when it's going to arrive.
I think it is going to be super fast, and I think our problems are going to be whether us in this room are more native users of it than it is about anything else.
Kate?
I think it's going to be quicker than we think, but I think it is going to take this next generation of people coming into the workforce, including people that are there right now and they're like in their 20s, to get empowered and to get in order for this to really take off. And so, but I think it's going to happen quicker than we think, but we need to make sure we're empowering kind of that next gen of people that can really help us think through how to apply it to actually have it happen quick.
I'm very excited to see what you guys come up with, and really thank you so much for being here.
Thank you.
Thank you.